Assalamualaikum warahmatullahi wabarakatuh. I'm Indah Lestari. I IPEC student 2016, Universitas Muhammadiyah Yogyakarta, and now I will continue the presentation to chapter 4 with the topic is organizational financial reporting. In Indonesia, foundations are regulated in Law Number 28 of 2004 concerning amendment to Law Number 16 of 2001 concerning the foundation. The foundation is an entity consisting of assets that are separate and intended to achieve goals pertaining to the social, religious, and humanitarian fields, which do not have members. In terms of foundation wealth, Article 26 regulates that the foundation wealth comes from a number of assets which are separated in the form of money or goods and can be obtained from donations, non-binding, or assistance. In certain cases, the country can provide assistance to the foundation. The characteristic of the foundation can be summarized as follows. The first is the resources of non-profit entity come from donors who do not expect repayment, payments, or benefit economic that are comparable to the number of resources provided. The second one is reduce goals and or services without the aim of fostering profits, and if an entity non-profit generates profits, the amount is not shared with the founders or owners on the non-profit entity. Foundation financial statement users have a common interest that is not different from a business organization, namely to assess service provided by the foundation and its ability to continue to provide these services. The second one is the way managers carry out their responsibilities and aspect of the managerial performance. The ability of an organization to continue to provide services is communicated through a financial position report that provides information about assets, liabilities, and information about the relationship between these elements. This report must separately present both net and assets non-binding. Article 49 stipulates that within a period of no later than 5 months from the date of the foundation's book year, the management is obligated to prepare a written annual report containing at least a first is report on the condition and activities of the foundation during the past financial year and the result achieved. Second one is financial elements consisting of statement of financial position at the end of the period, activity reports, cash flow statements, and financial statement notes. In the event that the foundation enters into transaction with other parties that give rise to right and obligation for the foundation, the transaction must be included in the annual report. Accountability of managers regarding their ability to manage organizational resources received from donors is presented through activity and cash flow reports. The activity reports must present information regarding change that occur in the group of net assets. A basic implementation of Financial Accounting Foundation is a statement of accounting standards, Financial, number 45, about accounting for non-profit organizations. The main purpose of the financial statement foundations is to provide relevant information to meet the interests of donors, management members, creditors, and other parties who provide the resources for the foundation. In detail, the objective of the foundation's financial statement are to present information about first is amounts and assets, liability and non-assets of a foundation. The second is influence of transactions, events, and other situations that change the value and nature of assets net. The third one is type and amount of inflows and outflows of resources for one period and the relationship between the two. The fourth one is the way a foundation earns and spends cash, obtains loans and repay loans, and other factors that influence its liquidity. The last one is a foundation service businesses. It can be observed that the financial statement of foundation organization are similar to business organization except three main things. The three main things that are not similar to business organization, namely non-profit organization do not have income statements, but this report can be analog to activity reports. The second one is non-profit organization do not have a report on changes in equity as our businesses organization. This is because non-profit organizations are not owned by entity. Any equity and non-profit organizations can be analog to the net assets that will be presented in the activity report. The net assets consist of three types. The first is unrestricted net assets are resources whose use is not restricted to certain purposes by the donors. The second one is temporary net assets are resources whose restrictions on use are maintained up to a certain period of or until met conditions are. The third one is permanent bound net assets are those resources whose restrictions are permanently maintained. However, non-profit organizations are allowed to use part or all of the income or other economic benefit derived from these resources. Example of these types of assets are endowments, inheritance, and endowments. The process of preparing financial statement begins with a proof of receipt or proof of payment and proof of receipt from the treasurer in the form of receipt and then recorded in the receipt and daily distribution cash books. Then recapitulated and made monthly financial statement annual. Financial reports made by the annual institution must meet generally accepted accounting principle, namely in accordance with accounting principles in terms of recognition, measurements, disclosure, and presentation. Next, we talk about the financial position report. The classification of assets and liabilities. Liquidity information is provided in the following manner. The first is presenting assets that based on the order of liquidity and liabilities based on the maturity date. The second one is group assets into current and non-current, and liability in the short and long term. And the last one is disclose information regarding the liquidity of assets or at maturity or liability including restrictions on the use of assets is in notes to financial statements. Next is the classification of bound or unrestricted net assets. A statement of financial position shows the amount of each group of net assets based on the presence or absence of restrictions by donors, namely are the permanent bound net assets, temporary net assets, unrestricted net assets, and information regarding the nature and amount of permanently or temporary restrictions is disclosed by presenting the amount in the financial statements or in the notes to the financial statements. These reports aim to provide information about assets, liabilities, and net assets, and information about the relationship between these elements at a given time. This information can be help donors, organization members, creditors, and other parties to assess the organization's ability to provide service in a sustainable manner, and liquidity, financial flexibility, the ability to fulfill its obligation, and external funding needs. Components in the financial position report include assets. The assets divided into cash and cash equivalents, receivables, stocks, lease, insurance, and other service paid in advance, land, buildings, equipment, and other fixed assets used to produce goods and service, and others. And then when viewed from the arrangement, it can be understood that the presentation of assets in the statements of position financial non-profit organization is also sorted by its liquidity, the ability of an asset to be easily converted into cash. We already talked about the part of assets. Next is the part of liability. There are debt, prepaid income, long-term debt, etc. And then the net assets. The net asset divided into three. First is unrestricted net assets. The second is net assets are temporary bound. The third one is net assets are permanently bound. And now we move to activity report. The main purpose of an activity report is to provide information about the effect of transactions and the other events that change the number and nature of net assets, the relationship between transaction and other events, how to use resources in the implementation of various programs or services. Information in the activity report, which is used in conjunction with disclosure information in the other financial statements, can help the donors, members, organizational creditors, and other parties to evaluate performance in the period, to assess efforts, capability, and organizational sustainability and providing services, and to assessing the implementation of the manager's responsibilities and performance. The activity reports are focused on the organization as a whole and present changes in the number of net assets during a period. Changes in net assets in activity reports are reflected in net assets in the statement of financial positions. The main purpose of the activity report is to provide information about the effect of transaction and other events that change the number and nature of net assets, the relationship between transaction and other events, and how resources are used in the implementation of various programs or service. Changes in net assets in activity reports usually involve four types of transaction, namely income, expenses, gains and losses, and reclassification of net assets. All changes in these net assets will be reflected in the final value of the net assets presented in the statement of financial position. The information in this report can help stakeholders to evaluate the performance of non-profit organizations in a period. Next is to assess the efforts, abilities, and sustainability of the organization and provide services. And the last one is to assess the implementation of the manager's responsibility and performance. Furthermore, the component in the activity report include revenue. The revenue include donation, services, and investment income. And the second is expenses. Expense is divided into two. The first is expenses related to service delivery program, and the second is expenses related to supporting activities. Next, let's talk about cash flow statements. The main purpose of the cash flow statement is to provide information about receipts and cash disbursement in a period. The cash flow statement is presented in accordance with PSAK 2 concerning the statement of cash flow. Next, let's talk about cash flow statements. The main purpose of the cash flow statement is to provide information about receipts and cash disbursement in a period. The cash flow statement is presented in accordance with PSAK 2 concerning the statement of cash flow. Next, let's talk about cash flow statements. The main purpose of the cash flow statement is to provide information about receipts and cash disbursement in a period. The cash flow statement is presented in accordance with PSAK 2 concerning the statement of cash flow. The cash flow statements present information about changes in the balance of cash and cash equivalent in a period of activity in accordance with the date of the financial position report. The cash flow statement is presented in accordance with PSAK number 2 concerning cash flow statements with the following addition. First is funding activities. The second one is disclosure of information regarding non-investment and financing activities, donation in the form of building and or investment assets, application of the accounting foundation includes organizations like orphanages, hospitals, and education. I think it's enough for these videos today, and I hope you can enjoy this video and you can understand what I present about. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.